That's where the show starts here, and in that, a franchise is not the right fit for everyone. Let me repeat that. It is not the right fit for everyone. It is a vehicle. There are many vehicles out there, startups, franchises, real estate syndication, traditional investing in the stock market, mutual funds, the list goes on. My why was my family. Well, what does that mean? Well, that why, my family basically meant wanted to spend more time with them. I worked on Wall Street, 2003, four, five, six. And with that commute, I was never going to see my family. By the time I left at 5:30 in the morning and got home after 8:30, 9 o'clock at night, 5 hour round trip commute, I needed to make a change. So that my why was spending more time with family, flexibility, and, always had the idea of becoming a soccer coach and never missing a soccer game, which is something I got to accomplish. And that was my big accomplishment as a business owner, is not just the money, but that time freedom that it created. So look at a company like McDonald's or Subway and say, okay, back in the day when I started looking, Subway was, I think, one of the top selling franchises at the time. And I said, okay, I can make it work. And what I found out was I was settling. I kept settling. Like, I didn't want a lot of staff. I didn't want to be open every single day. I didn't want to rely on a growth strategy of owning additional locations, which is, there's nothing wrong with, but just wasn't my ideal business when I wrote it down on paper. So you start to settle.
Welcome to the Franchise Freedom Podcast, where you can escape the corporate trap through franchise ownership. Here's your host, Giuseppe Grammatico, the Franchise Guide.
Welcome, everyone. Giuseppe Grammatico, your franchise guide. Really appreciate you guys tuning in today, and an extended welcome to all our new listeners. If you are looking at potentially owning a business, owning a franchise, how to make that transition from employee to employer, transitioning out of the military, what are the next steps? How do I career transition there? To even adding to your portfolio investments, you're in the right spot. We cover so many different topics. Our new website, ggthefranchiseguide.com, we have a new search tool. Makes it a lot easier to search for specific topics. So if you want to learn about funding, you want to learn about exit strategy planning, just type it in. It'll pull every episode since 2020. So this will be our 6th year with the show, and we cover literally just about every topic, and we're approaching 300 episodes now. A lot of the topics are based on your inputs and questions that I get on a daily basis. We greatly appreciate everything. So in regards to topics, I wanted to revisit a topic. I went back, a suggestion actually from a colleague of mine, and we looked at some of the most downloaded shows, and some of them go back several years. Some of them are a little bit more recent. And I do realize when listening to the show, you only go back so far. So this is a show we did back in January of 2025. We're going to revisit that show. Really, it's your complete guide to finding your perfect franchise. It really summarizes everything we do. It talks about our value proposition, how we're able to help you figure out if you're a good fit for a franchise. And then ideally, what are those characteristics? What does that ideal franchise look like from the angle of what are your skill sets? What's your day in a life? What's your role in the business? Location, staff. We cover just about everything. So this is a great podcast. There really wasn't any new updates, so why recreate the wheel? We're going to revisit this show. We usually send this show out to anyone we just start working with as a general overview of exactly what to expect when we work together, and help to prepare you and give you some things to think about. So some people may feel maybe the timing isn't right just now, and that's okay. We meet you where you're at. And some people are ready to go, and they start listing all the characteristics. They start getting their financials in order, which is super exciting. And we dive in and start looking for, what does that perfect model look like specifically for you and your family and your situation? This isn't cookie cutter. This isn't a one size fit all. So really excited to get your feedback. Again, we use this episode as one of our top downloaded episodes as just kind of a framework of exactly how we were able to help each and every one of our families that reach out to us on a daily basis. So let me know what your thoughts are on the show. If you're looking to dive a little bit deeper, so we touch on funding. We have topics, we have Mike Minatelli, that we cover funding a lot deeper. So if there's a specific topic and you're like, man, I want to learn a little bit more about funding, or I want to learn about at the end of the day, how do I sell this? What's my exit strategy? Type in exit strategy after listening to the episode in the search bar. What's going to happen is it's going to pull anything that we talk about exit strategies. And there's one in particular, probably our second highest downloaded episode with David C. Barnett, who we've had on the show every year. It talks about former a traditional business broker turn advisor, business advisor, and talks about what to prepare for. And you'll be shocked when he talks about first thing to do is prepare day one. We'll definitely dive a lot deeper. So anyway, long enough intro. Enjoy the show. Let me know your thoughts. Looking forward to a great year. Looking forward to helping as many people as possible make that transition into hiring themselves, and appreciate it, guys. You're exploring franchises. Where the heck do you start? And just like what I hear people do all the time, what I did was I started looking at what the hot franchises were. Just interviewed Jason Pfeiffer, which we released a two-part series from Entrepreneur Magazine. So well before he started as their editor-in-chief, I was looking at the top 500 brands, I believe it was, the magazine cover read, and started kind of looking down that list. And nothing wrong with looking at brands, but really kind of figuring out what a franchise was. I understood franchising to be fast food, Subway, McDonald's, and really understanding what a franchise was, and figuring out if that would fit what I was looking to accomplish. That's where the show starts here, and in that a franchise is not the right fit for everyone. Let me repeat that. It is not the right fit for everyone. It is a vehicle. There are many vehicles out there: startups, franchises, real estate syndication, traditional investing in the stock market, mutual funds, the list goes on. So it's really figuring out the right mix. And for me, that mix was going to be business ownership, as I saw the upside, the growth, the exit value, the tax benefits, and the list goes on. So really, if I can help you in figuring out a franchise, figure out why you want to own a business, because a franchise is essentially a business. Whether it's a franchise or startup, why do you want to own a business? It is a lot of work. There's a big time commitment. And usually the people I work with, they are looking to accomplish a few things. Number one is they want to create another source of income, which is good. They want to create a safety net in the event of the next job loss, right? There's especially certain industries have been cutting back on job losses and layoffs and things like that. There are other individuals that own businesses that either want to convert their business into a franchise or diversify their investments, and maybe add on just purely investment or add on additional income streams. Maybe it's a mom and pop roofing company that wants to offer and add on a franchise that offers painting services, or a coverings business where they're able to essentially restore vinyl siding and things like that. So really figuring out, why you want to own a business. Yes, we all want to make more money, but, really kind of figuring out what is your why. For me, as an example, and that's something I'm starting to do a lot more, is kind of give my story and give some examples. My why was my family. Well, what does that mean? Well, that why, my family, basically meant wanted to spend more time with them. I worked on Wall Street, 2003, 4, 5, 6. And with that commute, I was never going to see my family. By the time I left at 5:30 in the morning and got home after 8:30, 9 o'clock at night, 5-hour round trip commute, I needed to make a change. So that my why was spending more time with family, flexibility, and, always had the idea of becoming a soccer coach and never missing a soccer game, which is something I got to accomplish. And that was my big accomplishment as a business owner, is not just the money, but that time freedom that it created. So some people, I always tell people they're looking for different things: time freedom, financials are more important than time, but time is a close second, or vice versa. And that is okay. Everyone's situation is different, but that why is going to be super important, because just like in any business, there's going to be bumps in the road, and you need that strong enough why to really get you through the ups and downs in any business. So things to consider with the franchise. Number one is you need money to invest. Now, with a startup, the investment could be less, but what happens is that you're figuring out the system. So what you save, avoiding a franchise fee in a startup, it may take you 2-3 years to put that business plan together. Whereas a franchise, there are certain businesses that don't require any type of brick and mortar. You're up and running in 90 days or less. So you're really kind of speeding up the process, kind of figuring out, what you have, looking at your financials, always getting your financials in order. So liquid assets, your liquidity, your total assets, your liabilities. So basically your assets minus your liabilities give you your net worth. The assets also include the liquidity, but how much money, do you have to put towards the business? I recommend as a starting point, 50,000 liquid, 100,000 net worth. You're looking at the equity in your home and things like that for the assets, but you need to deduct the mortgage. But that's just a starting point. You need to make sure that, it also depends how you're running the business. So if you're running it full time, you need to make sure that you have enough of a safety net or a nest egg set aside to pay your monthly expense. You may need 6 months living expense aside, because if you are the only income in the household, who's paying your mortgage and rent and health insurance and student loans or whatever you have out there. Money is one, so get your financials in order regardless. If you're looking to buy a business or not, you should know where you stand financially. That's one. Secondly, with a franchise specifically, you want to look at things such as, am I okay following a system? If you're buying a fast food franchise that serves burgers, are you going in saying, okay, I'm okay with the menu and I'm just going to run with what works? Or is your first thought, how can you change the menu? And usually that's a red flag. Not to say there's not any autonomy in running the business, but the intention is to run with that model. That's the advantage you're getting with a franchise. Things to think about. So financials is one, and you notice some of these questions pop up on the website. The second one is, can you follow a system? Really important, because that's the value proposition of a franchise, right? They have the system built out for you so that you can easily execute and run with it. Some people like to create everything from scratch, and that's okay. Maybe not the best fit for a franchise, but that's really what a franchise is. They have the system, you run with it. Speed to get open, which is a major advantage. And the autonomy comes with how you're running the day to day via the marketing, your roles, and things like that. And we're going to touch more on roles and characteristics of the business next. And the last thing, as far as financials and can you follow a system, is time frame. Because at the end of the day, you can spend as much as you like researching franchises, but ultimately with the franchise, if you're looking at a specific franchise, other people are looking at a franchise too, just like you're in the real estate market looking at a home or an investment property or building on the commercial side, that may not be available. So I always tell people, if you are looking to make a decision within six months or less, now is probably a good time to start considering a franchise, not to open, but to actually make that decision. Further than 6 months, if it's a year or two, it's okay to start the process, but not maybe dive into specific brands, because we don't know what's going to be available in the next year or two. That's something also to think about, is that with the franchise, it's going to be a location or a specific territory, and other people are going to be looking at that as well. So consider those three bullet points. I think is going to be super beneficial. And, hopefully you're getting a lot of takeaways. And again, if we're working together, we're going through all this, we're spending a lot of time, and that's done on our first call, which is that 20-minute intro call. So we'll figure out together kind of your current situation, what you're looking to accomplish, expectations of a franchise. We're going to go through things, and we'll touch on some here that there are over 4,000 franchise. So these are the stats that we give, 70 plus industries, all investment levels. There, if you can think of a business model, there's a franchise, and not every franchise is created equal. So we go through that as well, and typically 20 minutes or less. Assuming how that call goes, if we both agree that a franchise may be a good fit, we schedule a second call. And prior to that second call, we send out a survey or a questionnaire that will give us a little bit more insights on your background, your experience levels, what your skill set is. Not just you have experience in the roofing business, but is it that transferable skill set of sales and things like that? So that it'll go through there. Will you have partners? If you're married, or are you going to have partners? Are they going to be involved, and at what capacity? Are they silent or active partners? What do they bring to the table? And once we get that back, we schedule kind of the second part, which is, what does the ideal franchise look like? So again, if a franchise isn't a good fit, no real reason to start looking at brands and doing all the extra work. It's really getting clear if a franchise could work. So that's kind of step one. Step two in finding your perfect franchise is, what does the ideal business look like? Now, this is really reverse engineering the process, because what most people do is they'll look at a company like McDonald's or Subway and say, okay, back in the day when I started looking, Subway was, I think, one of the top selling franchises at the time. And I said, okay, I can make it work. And what I found out was I was settling. I kept settling. Like, I didn't want a lot of staff. I didn't want to be open every single day. I didn't want to rely on a growth strategy of owning additional locations, which is, there's nothing wrong with, but just wasn't my ideal business when I wrote it down on paper. So you start to settle. So my challenge to you is, put all the brands aside. We don't even care about brands at this point. Is to set up a 60-minute consultation call. And if you're doing it on your own, and really, if you're, kind of listing out what the ideal business looks like. So let's go down some options. What is your role in the business? Are you going to be a full-time owner, leaving your full-time job, or are you going to be running this part-time, semi-absentee? You've heard that term. I've talked about it on previous episodes. Will you be relying on a general manager? Not all brands will require a general manager. Some could be run on your own without staff, maybe a few contractors, but are you okay with a manager? And if you are, keeping in mind that will increase your investment, because now you have an extra salary. So those are things to consider. Secondly, what do you enjoy doing? What are your skills? Are you an introvert, an extrovert? Do you enjoy sales? The role in the business is going to be big, because we tend to fall in love with the product or service of the franchise, forgetting what the role of the franchisee is. And you may love the idea of a certain service, but if it requires you to be the mayor of the town, and really network and go to events and podcasts and stuff like that, and that's not your cup of tea, that's going to be a difficult business to run. So really, concentrating on the role, and keeping in mind too that every franchise is different. So you may have two franchises that offer the same service and or product, and the roles will be different. One of the brands will say mosquito spraying, will have you going out there spraying for mosquitoes, building up a base and then hiring staff. Another one will maybe never have you touching a blower and spraying for mosquitoes, and have you networking day one. So same exact business, service wise, but different, completely different roles. These are things to think about. Your employees is another category. What do your employees look like? I know it's an odd question, but your staff is going to be crucial. There are going to be certain businesses that require W-2 employees. Some are going to require 1099 contractors, and some are going to be a hybrid. So maybe your bookkeeper, your admin, your general manager, those are the W-2, the operational support. And then the people doing the actual work, we'll call it roofing and siding. Those are going to be contractors. That's an option. There are other businesses, executive recruitment, expense reduction, where you can run the business on your own and solely rely on 1099 contractors. Other things to consider with staff: are they full time, part time? Is it a larger staff? You're going to tend to see larger numbers in the cleaning space, whereas you're going to see maybe lower numbers in the water and smoke restoration mitigation space. With the larger numbers, you're going to need some type of background in management, right? Because you're going to be managing this larger staff. So those are things to think about. Do you prefer, traveling to a single location and running a shop, and maybe in a shopping center, standalone building, or do you prefer the flexibility of working from home, where you're offering a service at a commercial property, residentially, cleaning, gutter cleaning and repair and replacement, roofing, painting, all that kind of stuff. So those are, again, the differences there. And, I'm not going to say one is better than the other, but, you have to look at, okay, at the end of the day, if I prefer the brick and mortar model, what is the growth strategy? And the growth strategy is simply to add on, the additional locations. So that's something to think about. So once you hit certain capacity, that each location can generate X, how many of those locations are needed, factoring in, what it costs to open up each one, versus a service-based type of business where, you're territory based. So if you're buying one, two, or three territories of a specific brand, you're going to essentially incur some additional discounted, usually franchise fees for those additional territories, just like, you would pay with the brick and mortar option, but you would really kind of focus on the local market with the same team. If you have a team of 3 or 2 or whatever that number is, whether you buy 1, 2, or 3 territories, you're going to start off with the same team and slowly or gradually expand the staff once you hit certain capacity with your staff and employees. So there's definitely differences there, and we talk a lot more about that. That's a kind of that scalability is going to be kind of another show in and of itself. Those are things that we talk about in the consultation. If we haven't, what else as far as that? That is, a couple things we dive a little bit deeper. So the difference with kind of the service we offer versus a portal, instead of saying, okay, do you prefer brick and mortar or service? Do you prefer a low number of employees or a lot? If you've never owned the business, you may have a hard time deciding or not knowing the difference. And I always say, go with what your comfort level is. But what we do is we break down in that 60 minutes. Okay, what's the difference between a brick and mortar aside from needing a physical location? We talk about the length of time we talk to get open, the investment. For a lot of the home service brands are up and running in 90 days or less. A brick and mortar non-standalone can take 6 months to a couple years to get open, depending on the complexity of the build out. Brick and mortar, if you're building something from scratch in a standalone building, so they're building the structure, or if they're just, essentially there was a restaurant in there, you're just changing it for your concept, that there's going to be some variables there, working with the landlord, negotiating leases. So tend to take a lot longer to get up and running. But these are the preferences, putting together the list of things that you want the business to have. And we get really selective. We want to make sure each business checks off all the boxes, as opposed to, let me just check off one box and not the others, and start to settle. Now you have a business that's kind of 50% of what you envision that business to be. That consultation, along with your responses from the survey you sent to us, give us a complete picture of what this ideal business looks like. And we summarize it in a franchise model, which is essentially, if you're doing it on your own, a summary. Just list those key areas, list your answers, and that's going to be part of your criteria search. We put it all together and really kind of help in what that ideal business looks like, so that any business, whether it's a franchise or even non-franchise, we want to make sure that we're using that model to gauge any business going forward. Between this call or the second step, the consultation that we just finished wrapped up here, we also want to talk about funding. I always, recommend speaking with the funding company directly. You have your financials together. We work with a company, both Benetrends or Fran Fund are two companies we work with, and they'll do a free, no cost analysis. There's no hard credit check. Usually it's a soft check to see kind of what you qualify for. They'll go through options like SBA, government backed loans. Believe it or not, there are some brands out there that, once approved by the SBA, will offer 100% financing. Not common, but there are a handful of brands that will do that. Typically, 20 to 30% is what you're looking to put down. Just say an average service-based brand is 150 to 200,000 all in, which is essentially the 90 days of operation, working capital, franchise fee, and all the costs involved to get the business up and running and to run for 3 months. We'll round it up, just say 200,000. You're looking at about 20 to 30%. So 40 to 60,000, and that 40 to 60,000 would be the down payment, and then the rest would be financed via the SBA. The use of retirement assets, this Rob's plan, rollover business startup, and those plans get to utilize previous employers' 401k, an old traditional IRA, not a Roth IRA. If all your money's with your current employer, those funds will become qualified after leaving the employer. So something to think about as well. Some people use a combination of a retirement rollover and an SBA loan, and Benetrends or Fran Fund will be able to walk you through the process. Kind of like when you're buying a home, want to make sure that everything is in line, that you're qualified, and looking at brands that you qualify for financially. But just because you qualify for up to 500,000, your comfort level may only be 200,000. So getting clear on, what you qualify for and then what you're comfortable with are two different things. But knowing, these are the rates, these are going to be my payments. So going back to the, 100% financing, that's great. maybe it's no money down, but it's going to inflate your monthly payments. So you need to be aware. And when putting together your pro forma, you're going to have that service to debt, what that monthly payment is. And the SBA will offer variable rates. So you want to factor in, okay, if rates go up or down, maybe adding a separate line item there in the event rates go up half a point or down half a point or a quarter point or whatever it is. How will that affect my bottom line as well as my payments? So yeah, so that's really the second stage. Bennett Trends will also, or Fran Fund will go through home equity lines of credit. That may be an option. They may not offer it directly, but recommend speaking with the bank or your mortgage lender. There are options where you would work with your financial advisor and take a loan on your investments without having to sell them and incur commissions and capital gain and things like that. So you can take a loan on your money, keeping in mind you want to avoid and be aware of margin calls depending on what your investments are in. But these are typically for non-retirement investment accounts, and they spend a lot of time. You're looking to invest a couple calls, an hour or so. You'll get your credit, what you qualify for, all the options, and it may be a combination. But just like buying a home, you want to be very clear on what you can afford, because that alone may rule out certain brands or brick and mortar if the maximum loan is under a couple $100,000. So those are things, and we're building here, right? This is a process, and this is really the order to do it. And because this way, by getting selective, knowing, your comfort level, what you qualify for financially, what the ideal business looks like. Hey guys, thanks for listening. I hope you're enjoying the show. As a thank you for being a valued listener, wanted to offer you a free copy of my book, Franchise Freedom. This book was written back in 2020, and it's my exact blueprint in helping you find that perfect franchise. I wrote it based off my experiences and wanted to pass that along to you. Want to chat today? You can book a call directly on our website, top right side of that screen, and you can schedule a 20-minute call. We'll dive into if a franchise is a good fit, help you get qualified, and figure out what that perfect franchise match may be. So I hope you take me up on my offer. Once again, Franchise Freedom. Download the book today for free or book a call with me directly, and we'll help you bypass all that information you find online. Most importantly, figuring out if a franchise is the right fit and then figuring out what that perfect franchise looks like. So thanks again for listening to the show, and back to the show. We get into step number 3, and that is intro to brands. And by doing this, we're getting super, super selective. We're looking at brands that check off all the boxes, that will be able to take advantage of your skill set. Your staff looks like the way they look like in that franchise model. You have a non brick and mortar because you want to be up and running quicker. Just an example. You're looking for, not just step of territory. You want it to be in your home market and really just stay there because that's where you have a lot of connections, and maybe you've already joined the Chamber of Commerce and things like that. With brands and with franchising, they each company will have their own way of going about due diligence. We assist in this area. These are weekly calls that we do for 30, 60 minutes or even more. And each brand process is going to be a little bit different. Some brands on the intro call will send you the franchise disclosure document, the FDD, which contains the franchise agreement on the first call. Others will send that to you on the second or third call. Some will have you speaking with franchisees sooner than later. It's a process. They want to make sure you're okay following a process, and each company's process is different. What I will say is that you'll get all the information needed. So on each call, there's going to be a theme. So to give you an example of a structure would be, first call is just a intro call. Let's just talk about high level. What does the brand do? They'll learn a little bit about you. What does the brand do? What is the typical role of a franchisee? And then if everything looks good, they'll answer some questions. They'll have some additional questions for you, kind of a two-way street, two-way interview. If you both feel like it's worth having a second call, then they may dive into the franchise disclosure document, financials, how to put together a pro forma. That may be a second call. Third call is territory management. Let's look at territories and or locations. If it's a brick and mortar, what is the availability? Not the exact location, but the zip codes that this brand may work in, assuming it could work in all zip codes, or if it may work better in certain zip codes. Some brands will base their criteria on average household income. Others will base it purely on population. So Each franchise brand will have a criteria, a fourth going into FDD, specific questions, franchise disclosure document, going through that, outstanding questions, outstanding concerns. At this stage, third or fourth call, you're again based off of the brand. They may put together and give you pre-recorded calls for validation. This is the kind of the second part of due diligence, and they're going to go through maybe pre-recorded calls where existing franchisees will talk about their experiences. Maybe it was a live call that you couldn't make and they recorded. So other prospective candidates, franchisees are going in asking questions about the brand, the role, the growth, the marketing, whatever the questions that come up. You'll have one-on-one calls, you'll have group live calls. There's going to be lots of options to really discuss with existing franchisees and ask them the $1 million question that I talk about over and over again. Knowing what you know, would you do it all over again? Sometimes things start off a little rough. There was a change in a marketing vendor, or the marketing was in-house and they brought it out of house. Whatever the case may be, you want to make sure the franchisor is taking care of the franchisees. There's a good culture, good relationship, and nothing is ever perfect. So if there ever was an issue or mistake, knowing that the franchisor was open to discussing that with you and just rectifying the issue, and just simply not just fixing issues, but working with franchisees, offering, that support, and not running the business for you. That's not what a franchise is, right? A franchise is a proven business model, but supporting you. So if you are having issues, going back and to your coach or your point of contact and asking for help. Hey, I need some assistance. Where can we improve? And it may be so simple for the franchisor. They may be able to figure that out in 60 seconds. Whereas you're just been looking at your P&L and realize, hold on a second, my costs are a little bit out of whack, or why am I paying for this? Or, lead flow is great and we're closing at a 20% where it should be 40. Is it the salesperson that needs to get retrained? Is it the lead quality? Is it a combination? These are things to tackle, and the franchisor, you want them to be proactive. You're going to hear that from the franchisees via their feedback. So that is, intro to the brands. I say, kind of rule of thumb, 2 calls at bare minimum you'll need with the brand to get a true understanding of what the brand does. Brand sells burgers, we get it, but what is the role? What's the idea and the financials and the investment, the item 7 range, the item 19 financial representation, getting just a better idea by the second call. Franchisors will have a process before inviting you to speak with the franchisees and validation. They obviously, want you to go through and ask the questions and see if the fit's there before bringing on additional support like those franchisee calls. Finally, if things are going well, the franchisor, in many cases, will have an in-person discovery day. It's the final stage where you'll get to meet with other people looking at the brand, the C-suite, the founders, and everyone else. And usually, if you've made it that far and you get the invite, there's a good chance of getting approved for the franchise. Remember, it's not just about, can I afford it? You need to get approved. And typically they're going to be in person. Some will offer a virtual option, or just virtually, and some will offer both. On a rare case, I've seen this where the CEOs and founders are going to be a lot more involved on those Zoom calls, and they may just bypass the discovery day because they're going to be a lot more active. Instead of just jumping on one call, maybe they're on every other, 2 or 3 calls, and they're putting together feedback and things like that. And if they do feel during the process it's not a good fit, bringing it up sooner than later than dragging on the process. That's a part of responsible franchising, is being very clear on who's the right fit. And, so some may not even do the discovery day at all. That's a smaller percentage, but I've been seeing more and more companies doing that because the founders and CEOs are much more present and involved early stage, or I should say throughout the process. And that's kind of discovery. Usually after that, what happens is that you're going to be essentially going, getting an award letter. Obviously, they want to make sure nothing has changed significantly, like a partner leaving or huge change financially. But you'll get an award letter stating, you have been approved, the number of territories, the number of locations, and things like that. and then given kind of a length of time to make that final decision. So going back to brands, so we talked about intro the brands. You gotta you don't know what you don't know, and you're going to learn a lot on these calls. We typically recommend looking at three companies at a time that all kind of compare and contrast from one another. And that way you can look at a B2B, a B2C type of business. Maybe one of them is brick and mortar, so you can understand all the differences. And, sometimes on occasion, there's a change to the franchise model. Step four is constantly, continuing our conversations and reviewing brands, going back to the franchise model, and sometimes reiterating. Remember, we talked about, some people, they hear of a new brand, sexy brand that they just heard, and they say, well, can we add that to the mix? And we can always add and remove brands to the mix, but we always go back to the model and say, well, this specific brand itself, although it's, something that an industry that you have a little bit more familiarity within, but it does require a lot more employees, and you wanted to keep the headcount under five. So we always revisit that to see if it makes sense or not. Or the most popular is a new brand, and want to add them to the mix. And I always take a step back and say, well, this particular brand may require you to be full time in the business. If that's not in the cards, there's no reason to really look at that brand unless that opportunity comes up. So yeah, to leave the company sooner than later. So going back, step four, we're constantly reviewing brands, getting feedback. I always recommend a Word document, a Google sheet, whatever it is. Each brand, list your questions, list your concerns. At the end of the day, we're looking for the brand that really stand out of the three, and just taking note and giving the brands a chance to present, and bringing up your questions and concerns. Sometimes they're all great fits, or in many cases, like myself, the brand that I wasn't as interested in ended up being the brand that I ended up moving forward with. Again, going back to that 2-page model that we sent to you, reviewing those brands and doing our weekly calls, because sometimes I've had people say, I'm really confused, not sure what to do. And we talk it out, and it's really simple sometimes in many cases for me to see, hey, these are the standouts. Maybe these are some follow-up questions, but we'll go through reviewing some of the questions you should be asking, reminding on due diligence. I see a lot of this where franchisees get really excited and forget to, or only speak with one existing franchise owner. You want to spend time there. You want to talk to the people that are running their businesses. What are their pain points? What are ways to kind of simplify things? What are their recommendations and things like that? Those are areas I would spend a lot of time on and not skip. Final decisions. So as I mentioned, you will be awarded a franchise at some point, and going through discovery, in person, virtual, or if that company does not offer, and you'll be awarded and given a certain length of time. And you know basically, they're doing that because they are reserving that territory and locations for you so that no one else could purchase those territories in that franchise. Prior to this, going to that discovery and knowing what the process looks like, because a good franchisor will kind of give you a timeline, is that you may want to look into hiring a franchise attorney. This is not mandatory, but it is recommended. A franchise, specifically a franchise attorney, and they don't have to be in the state that you're located in. What that franchise attorney will do is that they'll review the FDD in its entirety. They'll go through some questions that you should maybe be bringing up, some concerns, on occasion, a potential change. Now, most of franchise disclosure documents and agreements are really not many changes are made. Some brands will refuse to make any changes. So you're looking for clarity. You're looking for someone to see if there are any red flags, if there's any special arrangements to add an addendum to get that in writing. For example, there you have a major life event, you're getting married in the next couple months. Maybe you can't open up within the 6 months. Can they extend that a month or two, or whatever the case may be? You want to ask those questions sooner than later, and a franchise attorney will go through that and make any suggestions. But really, the goal here is not to change the agreement. It's more of peace of mind that everything looks good. The language is typical in a franchise agreement. We've been referred individuals, franchise attorneys that do this. You want to make sure on it, if you're interviewing franchise attorneys, asking them specifically, hey, can you work with it? Can you review this specific brand? On occasion, there may be a conflict where the franchise attorney is already working with a specific brand. There are attorneys that switch their business and just do franchise disclosure document reviews. So that makes it a lot easier. But whenever you're interviewing, you may need a second person just in case there is a conflict. So again, that's optional. Costs, I've seen two, three, $4,000 and up, depending on a flat fee or hourly fee. That's usually done when you're very close to making that decision, so that you're not spending money to every single franchise that you talk to. So as you get really close, that franchise attorney can go through that process. And we've seen turnarounds of a week or two, depending on how many questions and calls and things like that. So that is really the process. So to kind of review, is a franchise a good fit for me? Start there. No need to continue if we got to hit those three criteria. Then we go into, what does the ideal business look like? Not what brands are out there, but what are the guts of the business via the characteristics. We get funding options and things like that. We get pre-approved to show the franchisor that we're qualified, kind of like a pre-qualification of a home. When we look at a starting point, I recommend three brands that kind of all compare and contrast. Continuing step four with reviewing each of the brands, reviewing the franchise model, making changes accordingly, making changes to the brands we're looking at, followed by final decisions. Okay, yeah, this brand checks off the boxes. I did the due diligence. I got funding options. I had a franchise attorney review everything, and I've been approved. Now let's get rocking and rolling. What is the roadmap look like from me signing the agreement today? How quickly can I get funding, especially with an SBA? It could take 2 or 3 months. A retirement rollover is going to be, just say a month, if on average, from what I've seen. When is the next training? Realistically, when can I get up and running? So if you are leaving a job, exactly up until when to give notice, obviously, to your employer and things like that. Mapping it out, letting obviously the family know what's going on. There's going to be a big, not just financial, but time investment when launching any new business. So those are kind of my five. If you want to dive in sooner than later, we do weekly calls. Usually, you got an intro call, a consultation call, and then a franchise review call. And I'm making intros directly to the brands. Each of the brands will contact you directly via email or phone call, provide you some additional information. And then, it's due diligence time. We're talking weekly. We're following up after your rounds of calls for feedback and things like that. And we're helping where we can. And sometimes, as I mentioned, we pick up on things that you're mentioning that you maybe not be realizing as you're going through the process. Wanted to share my screen really quick here. And as I mentioned, we go through the process. There's no cost, there's no catch, and we can work with you anywhere in the country. I cover the entire US and Canada. We are paid directly from the franchise companies, a referral fee. And just like an executive recruiter, just like a real estate agent, when you buy a home, you don't pay the agent, the seller does. Same thing in franchising. When we make the introductions, you get notified right away, as opposed to just submitting your information online, because they know that if we have worked together, you've been qualified. We've gone through the process. We've talked financials and what a franchise is and things like that. So you definitely get moved to the top of the list, contacted immediately, usually within 24 to 48 business hours. As far as, all right, who am I working with? We're going to go through this. It's me. I don't have staff or employees that I outsource to that are going to be doing this. We're going to work together. I've owned businesses for about 25 years. I've been in franchising since 2007. So what is that? 18, 19 years or so. I get it. I've been a corporate exec. I've been laid off. I've owned a non-franchise business and I've owned franchise businesses. I can provide feedback. I can provide mistakes I've made, plenty of mistakes in my first business of, trying to be an expert in all areas and micromanaging, to once I learned that I was doing that, how my business kind of really took off. It's really learning. If you can learn from our mistakes and from our experiences, not to say you'll never make a mistake, but it'll definitely help with the process. And the expectation, our job is not to sugarcoat. So yeah, I always tell everyone, a franchise is not a set it and forget it. This is not passive income. You're going to be actively in the business. The hours may vary, And the roles may vary, but maybe it's really managing a general manager from afar, but really empowering them to run the business, being on the same page, and going to training together, and finding a franchise that has a train the trainer program if the manager is hired later on. But support is there, but it just doesn't all rely and fall on the franchisor. It relies on you. You got to find the right people. They'll guide you and maybe say, these are some things to look for in that key employee. But really spending the time, and if I learned anything, it's really getting clear on delegating. What's everyone's roles, writing it out. If there's a role in question, putting it out there and deciding, hey, is this a role that you take or I take, or is it a role? Is it social media posting? Is it one person, or is it two people and one person posts Monday, Wednesday, and Friday, and then the other person posts the other days? So got to get crystal clear so that there are no gaps in the business. And it's going to be trial and error. There are going to be certain things that come up that are new, and then you'll decide together who's going to attack that role so that it just doesn't sit in limbo. I know when I hired my general manager, it was an ongoing list of things. And if it was working with the accountant or working with the FDD, that's a role I took. I said, I'll handle that. That could be done remotely. I wanted the general manager to focus on growth, profitability, making sure customers were happy. So I share my experiences. As I mentioned, I can work with you. If we figure out a franchise is a great fit, but the timing isn't right, no problem. We'll give you the resources, the book, the podcast, the webinar. Maybe we schedule a 6-month follow up. Reason being, financials need to be a little bit greater, and or credit score needs some improvement. That's okay. We may work together and figure out a franchise is not a good fit. Well, I work in doing this for and being in business for 25 years, and have attended various chamber of events and things like that, and the vast network. We've made introductions to other individuals in different key areas outside of franchising. So don't be shy. If you have questions, or no silly questions. If you want to take advantage of the site and then book a call, great. If not, jump on. We could definitely get through if a franchise is a good fit, and a consultation call. If we start in the beginning of the week and get all that handled on the first week, and potentially look at brands by week 2. We have a vast network of brands that we work with. We have full-time staff that are constantly pre-screening brands to make sure that they're checking off the boxes as far as growth and support, and things like that, and just having a plan to support their franchise owners going forward, and a growth strategy. Love what I do, would love to help you out, and looking forward to chatting anytime soon. We can talk about, people talk about trends and things like that. At the end of the day, you want that support. You want to make sure it's a viable business. There are certain industries that people feel are a little bit safer, that are not affected so much by the economy and trends. And in other cases, there are people that have various opinions. So we'll walk you through kind of what's out there, your options, and looking forward to helping any way possible. So give us a call, book a call, leave us some comments, what you thought of this episode. But this really summarizes a handful of episodes we've done over the years. Not much as far as updates, but wanted to consolidate the entire process for you. So thanks again for joining us today. Hopefully you found this helpful. Hopefully you enjoyed the new website that we launched, and I'll talk to you guys soon. Take care.
Thanks for tuning in. If you want to learn how to make the transition from corporate to owning your franchise, join Giuseppe on the next episode. You can also follow on all social media platforms and achieve financial and time freedom today.